you don't trust traditional currencies. You don't trust the pound, you don't trust the dollar, etc. Why don't you trust them?
Because they've been badly managed, if I'm honest. I believe that it's much better to store the value in Bitcoin for the benefit of the business.
There still are many skeptics, aren't there? It's a scam, it's a Ponzi scheme. How do you win them round?
Through the power of Bitcoin, I've given my business a real shot at growth. If you look back historically at Bitcoin, broadly speaking, no one who held for more than 4 years has ever lost any money.
Now, when you hear Bitcoin, I think people have three reactions, right? Their eyes glaze over, they are very skeptical, or they get really, really excited. What's your reaction?
Well, if you'd asked me 10 years ago, I would have sort of glazed over a bit, but now I'm reasonably excited because you can't write Bitcoin off and just say it doesn't matter. It's been around for 20 years. Lots of people own it. Lots of people have made money and lost money from it. So yeah, I'm excited. I'm interested. I don't know enough about it and I want to know more, which is just as well we have our guest in today, someone who's really taken a big play on Bitcoin, faces a lot of skepticism about the use to which he's putting it, and we're going to quiz him on that.
I'm Hannah Previtt, the Associate Business Editor of The Sunday Times.
And I'm Dominic O'Connell, columnist at The Times and business correspondent on Times Radio.
And from The Times and The Sunday Times, this is The Business,
where we bring you the kind of behind-the-scenes conversations that we normally have with business people and put you ringside.
Picking apart one big business story with guests from the front line.
Our business today is Bitcoin, and more specifically, one of the latest developments in the world of crypto assets, Bitcoin treasury companies. Do you remember, Hannah, when you first heard the word Bitcoin? Or do you have any associations with Bitcoin yourself?
So I must admit, I fall into the first category. So my eyes have glazed over. And I think part of that is because of the kind of crypto bro culture that seems to exist.
It is a bro. It comes out of the tech bro culture a bit, doesn't it?
Exactly. And I mean, my ears are peaked when I hear, so at the school gates, actually, some parents I know invested in Bitcoin quite early on and did really well. But I think they've done the sensible thing and now cashed that in and got out, which is what I think I would probably be.
So you're hugely skeptical about Bitcoin.
I am.
You are.
I am. I just think there are so many negative headlines around. If you look at the crypto queen, which is obviously back in the public domain in the last few weeks, she was sentenced to more than 11 years in jail for defrauding thousands of victims out of some £4.6 billion, which she converted to Bitcoin. And then, of course, we had Sam Bankman-Fried a few years ago when his crypto exchange imploded and he was sentenced to 25 years in jail. So I just think whilst you have these kind of characters associated with crypto, it does give ammunition to people like me who are skeptical. And I'm not alone. When I quizzed everyone on the business desk this morning, they were very much aligned with my thinking. But you aren't quite as skeptical, are you?
No, I'm not. I think that's being a bit Luddite, to be honest, because you can't ignore the fact that it's in play and it's working. And it's been around for 20 years. For those who don't know, Bitcoin is what's called a crypto asset. It was invented by someone who we don't know the identity of, a guy called, we think he's called Satoshi Nakamoto, who set up the basic digital architecture behind Bitcoin. In essence, it's a digital asset, an entry in a ledger, of which there will only ever be a finite number. You get them by doing this process called mining, which is basically doing these mathematical proofs. You do it with a computer and you get a Bitcoin out the back of it. Mm-hmm. The price has fluctuated wildly over the past 20 years. I remember actually buying a pizza in a trendy Shoreditch pub just for a piece about this new digital currency, which probably was nearly, maybe not 20 years ago, maybe 18 years ago. And I bought a pizza for, from memory, it was like £2 or something like that for a £10 pizza. And now it's £79,000 of Bitcoin and it's been a lot higher.
Wow. So
if I'd foregone the pizza, I probably wouldn't be here today.
Well, and people have done really well out of it, haven't they? And they go crazy when they lose it. Do you remember that the guy who threw away his hard drive and then he was paying people, metal detectors, to go through rubbish sites and to try and find the hard drive?
Didn't he then find someone to finance the excavation of the entire? I don't know happened to that? Did he actually find the hard drive or not?
No, and I actually had a quick look to see if there was an update, and this summer he's finally given up, but that's many years later. Yeah,
it was with tens of millions of pounds. Wasn't it? The other interesting thing was that people have vied or tried to claim that they are the inventor of Bitcoin, Satoshi Nakamoto. And last year we had a trial in the UK, a high court trial, where an Australian computer scientist called Craig Wright said, listen, I am Satoshi Nakamoto and I can prove it. And he lost the case, and it was rather embarrassing for Mr. Wright.
Oh, awkward. So let's move to talk about crypto treasury companies. Dom, you've been looking into the history of this a little bit, haven't you? So what are they, and how did they come about?
Well, they're a new twist on the whole crypto scene. So they were invented really by a company called MicroStrategy, which was an ordinary US company, an ordinary internet services company, which bimbled along for years and years. It was run by a guy called Michael Saylor, who had a few brushes with the regulators along the way. He had a fairly colourful history, it's safe to say, but it was an unremarkable company in that sense, providing internet services and other kind of online services to companies. But then in 2020, he went in a completely different direction, and he decided to use the normal treasury function of a company, which is where a company holds its investments, its cash or holdings in US government bonds, these kinds of things, just its reserves. And he thought, I'm going to put almost all of these into Bitcoin. And then he went out and started raising money, and he raised lots of money just to buy Bitcoin. And this is where the story gets really interesting, because you would think that the share price of MicroStrategy, as it's now known, would simply follow the value of the Bitcoin holding. It's obvious, isn't it? That's its asset, like any other asset.
Yeah.
But what happened instead was that this company's strategy, which coined this idea of Bitcoin treasury companies, it became worth on the stock market much, much more than the underlying Bitcoin. So there was this weird thing going on where shareholders or investors were prepared to pay more to own Bitcoin through a company than they were than just to go out and buy the Bitcoin itself. It was a multiple, and now it is the biggest corporate holder of Bitcoin in the world, and it is still worth more on the stock market, not as much as it was, but still worth more than the underlying Bitcoin. Explain that.
Well, hopefully our guests can do just that. And the other thing that I find really interesting about Michael Saylor is that he was a Bitcoin skeptic, or a Luddite, as you just referred to me. But he was converted, right? As you say, in 2020.
Yeah.
So I think that's really interesting too. Well, should we get our guest in?
I think we should. So this was really a US phenomenon, but now it's come over here. There are a few companies who are trying to do the same thing, this Bitcoin treasury strategy here in the UK. And our guest is the boss, the founder, and still chief executive of the biggest and the first smarter web company, it's called. And his name is Andrew Webbley. We're going to be talking to him about how he did it, following Michael Saylor, why he did it, and the reality of what the business is. So we're welcoming to the studio Andrew Webbley, Chief Executive of the Smarter Web Company, the British disciple of Michael Saylor. Can I introduce you like that, Andrew?
I've been called worse things.
Just tell us how you got started in all this, even before Bitcoin. How did you make your start in the business world?
Yeah, so I started my career in 1999, and I joined a small company that became one of the biggest companies in the UK, the most successful retail investment company in the UK, Hargreaves Lansdown. So I did that for 10 years, and I normally describe it to people as a well-paid apprenticeship. And it was a small company that became a FTSE 250 company. After I left, it became a FTSE 100 company. So we listed that on the stock exchange, and that was great. But then I got bored. So my job was the head of online, but I always wanted to run my own business. And I always remember Steve Lansdown saying that one of the most interesting things that he ever did was, setting up his own business. So I left and I set up my own company, the Smarter Web Company, and that was over 15 years ago now.
And so what was the premise for the business? What exactly were you doing? And how did you fund it in those early days? Did you just put some of your own cash in and bootstrap it, or did you raise money from investors?
No. So we never raised any money until this year, actually. So I started it in the good old fashioned way. So I set it up in one of the bedrooms in my house. And I used a very, very small amount of my own money to set it up. And we were profitable in the first year. And going back to pre-listing times, because obviously I can't give any projections or anything like that. Now we're a quoted company. We were profitable every single year for 15 years.
What kind of things were you selling to companies? What did you make?
Yeah, so I'm a developer, a computer programmer. So I built a content management system, which is the thing that powers, your website and pretty much every other website now. And then I sold that remotely over the internet way before remote working was trendy because of COVID. And I just marketed it in a much smaller way to how Hargreaves Lansdown marketed financial services. So I built a system that I could use to build websites for people. And then I sold that using marketing, direct marketing, over the internet to people. And we built up a client base of over 250 clients that all pay a reoccurring revenue stream to the company. So about 30% of our revenue historically has been reoccurring.
So if you were interested in technology, is that what led you to Bitcoin? Because you were in that world already?
Yeah, yes and no, really. So because I've been involved in investments because of Hargreaves Lansdown for about 25 years, I've always been interested in investing, sometimes well, sometimes badly. And then I stumbled across Bitcoin, I think it was 2017, 2018. It was just under 10 years ago. And its appeal to me initially was in part a medium of exchange and the potential there, and in part a pretty volatile asset that you could, attempt to trade badly or well. And so it wasn't until Michael Saylor pivoted his business, which was just over 5 years ago, MicroStrategy, now known as Strategy, that I felt that Bitcoin was something that I would just hold forever. So that was my eureka moment with Bitcoin. It was when Michael Saylor took a public company, which obviously I had experience with because of HL and because of investing, and Bitcoin, which I had a few years of experience in at that point, and smashed the two things together. And then that was it for me. I thought it was very much the future.
So just to be clear, you'd personally bought some Bitcoin before you set up the crypto treasury part of the business?
Yeah. And our business, the Smarter Web Company, I think it was 2022, 2023, something like that. We actually, and it was difficult for me to do at the time, we actually advertised Bitcoin as a way people could pay us. So if you look at our website, go on the Wayback Machine or something like that, you can see several years ago, before this trend that's captivated lots of people's imaginations this year, we were advertising that people could pay us in Bitcoin as well, because we believe in it. I genuinely believe that it's the very best asset that the world's ever seen.
So talk to us a bit about crypto treasury. So when did you set up that part of the business?
Yeah, so I spent probably the last 3 years looking for a company like this in the UK, because I love Strategy. I still hold shares in Strategy today. But because I live in the UK and I'm proud of the UK and I believe that the UK will be great again, I wanted a UK version of that and I couldn't find one. And then we got to about this time last year and I'd had enough of looking, and I thought, well, if no one else is going to do it, I'm going to list my business on the stock market and pursue the strategy that I believe, which is what we've done.
Can you explain the strategy a bit more? Because I think most people listening to this will think, well, okay, you have a company that's doing something, in your case, selling web services, and then you have a Bitcoin holding. Why does one make the other better?
Yeah, it's a great question. So if you look at any business, any good business, which to be fair, you struggle to find that many of them nowadays, but you find any good business and they've got a treasury function. So look at McDonald's, that's a good example. They probably, and don't quote me on this, they probably make more money out of real estate than they do out of hamburgers. My business for the last 15 and a bit years has had money, and it's had to do something with that money for the benefit of the shareholders, which before we became public was myself and my wife. So that's perfectly normal. Every single business has got a treasury function, whether it's a positive one, i.e. they've got assets, or a negative one, they've got debt. We haven't got any debt. So for me, because I don't believe in the value of the pound, the dollar, the euro, what am I going to do with the cash that we've got? I'm going to hold it in Bitcoin, because I believe that it's much better to store the value in Bitcoin for the benefit of the business than in cash. And then if you look at our business strategy, which we clearly stated before we listed, and also we put an RNS out, an announcement a few days after we listed, so that everyone had a long-term vision of where we saw the business over the next 10 years. It's called our 10-year plan. You can see that part of our strategy is growing our web design business and our acquisition strategy. And for that, you need a balance sheet. So when everyone said to me over the last 6 and a bit months, we love what you're doing, Andrew, we want to invest in you, I've said that's brilliant, because the stronger that I can make my balance sheet, i.e. the bigger we can make our balance sheet, the better the acquisitions and the better the growth we can deliver in the core business. So for someone like me, this is great, because my business wouldn't be able to grow without Bitcoin, because the banks are not interested in investing in a small business. If you go to a bank and you say, I need £100,000 or £1 million or whatever to grow my business, they'll potentially say yes. And then after they say yes, the next thing that they'll do is they'll screw you in charges, effectively, with initial fees and high interest rates and things. But through the power of Bitcoin, I've given my business a real shot at growth, alongside its treasury function. So I know that's a bit complicated for people that haven't seen it before, but
I think it's really interesting, actually, and lots of small business owners I talk to say the same thing about how difficult it is to access capital and access loans from the bank. How is it tempting to get kind of distracted from the core business just to, kind of frankly obsess about crypto all the time? Like, how do you make sure you're doing both and crypto doesn't just become the thing?
Well, so my business is a public business nowadays. So there's lots of things that are nothing to do with the business that I have to do, like corporate governance, shareholder communications, these things. And I'll be honest, it's been quite hard going from a tiny business to a business that's a lot more in people's eyes, managing more things, not only our treasury, managing more projects, having more people and things. And I'm really leaning on what I saw at HL to try and structure the business in such a way. So if you look at us today, we've got 10, 11, something like that people, and that will probably be 15 people in another 6 months. And
as you say, you listed in April. Let's just go through some of those kind of steps. So what was the float price?
So we listed at 2.5 pence.
And how high did it go?
Intraday, it went over £5. So that does actually make our company the best performing IPO in the UK, certainly in the last 20 years. Sometimes we say ever, but we've got the data that firmly backs up 20 years.
And where is it now?
So we're trading at about 60p. So, I think it's fair, with the benefit of hindsight, to say that maybe, and I don't control the market, of course, maybe it became slightly overvalued for a period of time. And I believe it's very much undervalued now. That's what I've always been told, that markets are always wrong. So they're either over or underpriced, never the right price. That's why the opportunities exist. But it's done really well. And it's been so satisfying for me to see a lot of people that have supported us that have done well. And I believe that we'll do very well in the future. And as you said just before, you and your wife were the only shareholders prior to the float. Have you personally sold any shares since the flotation? The opposite, actually. So I haven't got loads of cash, despite what some people think. I've got a lot of assets now, but we own approximately 10% of the company. And I genuinely don't know the number, but I believe that I've bought something like £200,000 worth of shares at probably, and this definitely doesn't make me a good investor, at probably 40 times the price that I sold, a good chunk of the business at when we IPO'd. I didn't really sell it. I just gave up a lot of the equity in exchange for the investment. But no, I haven't sold any shares. I've bought shares.
So the basic idea of a Bitcoin treasury company is that the stock market values it at more than the underlying Bitcoin. At your current price, are you worth more on the stock market than your underlying Bitcoin? As we're talking today, ever so slightly more. So we call it MNAV, which is basically the relationship between... This is a new stock market valuation we're going to have to get used to. Not share price, not market cap, not EPS, not anything like that. This is MNAV. Do explain what it is. Yeah, so MNAV in the strictest sense of the word is your enterprise value, which is broadly similar to your market cap. And then it's the relationship between that and your underlying assets. So at the moment in Bitcoin treasury land, no value really gets applied to operating businesses. So people look at us largely on the value of the Bitcoin treasury, but in time, as the business grows, we believe that they'll apply some value to that. So the metrics will change. But the one thing that people don't talk about
is the reason why people pay a higher value than the value of your Bitcoin is because it's the growth that you're going to give through the operating business and the way that you use capital markets to generate more Bitcoin. So if you look at us as a company, we started our public life with next to no Bitcoin. Today we have over 2,500 Bitcoin, which at today's price is over £200 million. So we've used capital markets to fundraise as opposed to borrowing money from a bank, etc. And then we've effectively increased the Bitcoin per share for our shareholders who are interested in that metric, over that time period. And we've probably increased it by I don't know off the top of my head, 50, 60, 70 times.
But that path of the share price from float to £5 down to 60p, that suggests to me that actually people aren't remotely interested in the Bitcoin treasury strategy. They're interested in this as a bit of a meme stock, something to have fun with.
I think that's a wider question than just Bitcoin treasury companies, in all fairness, because, my opinion, and this is quite interesting because I've got a lot of American friends and they think differently to how we think in the UK, in some ways. I think it's more a reflection of the short-term nature of a lot of investors nowadays. There's a lot of people in the UK, and this is one of the reasons why Bitcoin's done so well, that are under a great deal of pressure, and it's not okay. They've been squeezed by inflation and, the cost of living and all these things, and it's really tough out there. And because of that, I think it's also encouraged a lot of short-term mentality. And then the other metric there, which again I have to take some sort of hand in, I suppose, is the growth of technology over the last 20 or 30 years. That's created that instant gratification thing. So I think if you really dwell down to a lot of investors, you'd see a lot of people think that they're investors, but perhaps they're incredibly short-term investors and borderline traders. So I think if you look at our company and lots of other companies, there's that sort of herd mentality and short-term chasing of gains. Whereas what we've said to people all along is that we believe that Bitcoin's going to be the best asset in the world for decades to come. But we've got no idea what it's going to do today or tomorrow. It's either going to go up, down, or it's going to do nothing.
And you just mentioned the comparison with the US. What impact do you think, Trump and the very kind of pro-crypto administration has had?
I think it's been positive. But for as long as I've been investing in Bitcoin, I could look at every single year and I could see some years bad things and then most years good things that are catalysts. So if you look at like last year in the States when Trump got control of the administration, there were other things that year as well. For example, I believe it was March 2024, the SEC allowed Bitcoin ETFs, which in our country, in the UK, the FCA has only just allowed Bitcoin ETNs. So you've always got these catalysts for Bitcoin. It's something that market commentators often like to do. They like to attach narratives to price moves.
We should just stop and say ETN is an exchange traded note, a bit like a tracker fund, but slightly different.
Yeah, it's for the man on the street. It's broadly
it's
the same.
basically a tracker fund that follows the price of Bitcoin, and because it's been approved by the US, you can now, a retail investor can now go and buy it, which they can't do in the UK.
Exactly. So it's pretty much the same thing, as an investment fund that tracks the price of Bitcoin, and that's hugely positive, because that means that the FCA and the normal person on the street is now being told in a small way that it's okay to own Bitcoin. Over the last 5 or 6 years, for people like me, it's been incredibly difficult to buy Bitcoin. Your bank will stop you a lot of the times, and it's really difficult to do it. So it's all positive.
And it's worth saying, just as a bit of diversion on this, the FCA's position, the Financial Conduct Authority here in the UK, which is meant to safeguard retail investors, has until very recently basically said, don't buy Bitcoin. It's not regulated. You have no protection. It could go to zero.
Yeah, and even now, when they're allowing people to buy ETNs or start to allow people to buy ETNs, they're still attaching the wrong message, in my humble opinion.
The warning is still on the website, isn't it?
Yeah,
it's just there.
Yeah, and they say, which I've got a big problem with this, they say that Bitcoin's got no intrinsic value. That's like saying to me 25 years ago when I started working with the internet, that the internet's got no intrinsic value. It's a ridiculous thing to say. What's very interesting, and I have to stress, I'm not a political person in any way. I would support any political party that was trying to improve the UK, and I'm yet to find one. But there are some political parties. I think Nigel Farage came out this week saying that he would build a Bitcoin reserve for the country. He would lower the the capital gains tax for people holding Bitcoin, and little things like that. So there are glimmers of hope out there for people.
But there still are many skeptics, aren't there, of which I am probably one of them. And I did a very quick straw poll on the business desk before we came down here to record this episode today. And basically all of them say it's a scam, it's a Ponzi scheme, et cetera, et cetera. And one of them, one of the reporters on the team who knows this world very well indeed, she said, if it's something that you can't explain, then basically it's dodgy and I'm not going anywhere near it. So there are still those people, aren't there? And how do you win them round, or can you win them round? And also related to that, when you speak to people in your real life, your normal life, I don't know if you have children, but parents at the school gates, or your school friends, right? When you gather around at dinner parties and you talk about what you do they think that you're some snake oil salesman?
No, so I think it's really important to firstly differentiate between Bitcoin and every other crypto. So Bitcoin and crypto, completely different things. I personally do not invest in any other crypto. I don't even like the word. I think that most of them are rubbish, in fairness. And maybe in the future, some of them may have some merit, but not probably as a treasury asset. So that's the first thing to say. The second thing to say is that if you look back historically at Bitcoin, broadly speaking, no one who held for more than 4 years has ever lost any money. So it's the actual timescales of people. If I buy something today and I expect to sell it in 3 days' time, then I'm gambling. It's either going to be worth more, less, or the same. So I think it's a lack of understanding which will improve over time. In terms of my children, other than the fact that they don't see me so much at the moment, I think they're pretty proud of what we've done in our very, very small way for the UK. We've created a company that's listed, that's grown, which is pretty unusual in the equity markets in the UK over the last 16, 17 years since the financial crash, which is why Bitcoin was invented. So that's quite good. And my friends and family are slowly but surely getting the message. And what I always say to anyone who wants to speak to me about Bitcoin is, I believe it's the best asset in the world, but you need to research it. And if you do believe that it's got a place for, say, 1% or 3% or 5% or whatever you think of your portfolio, then you just dollar cost average in. I make a specific point of saying to people that just because I've got pretty much 100% of everything that I own invested in Bitcoin and Bitcoin treasury companies, no one else should really do that unless they're as convinced as me, But in my opinion, everyone should have, say, 3 or 5%. I'm not a financial advisor, so I cannot, talk about those things, but an allocation to Bitcoin, it's almost financially irresponsible not to have an allocation to Bitcoin.
In the same way, some people, you should allocate 5% to gold or something like that.
Yeah, gold, property. My son is 17, and I talk to him a lot about investment portfolios, and that's exactly what I say to him. You should have everything.
Can we just go back a bit to the argument you made about using Bitcoin as the funding mechanism for the rest of the company? I don't quite follow that argument, because you could have used that money. You've raised money to buy Bitcoin. You could have used the money that you raised to invest in that company. There's nothing magic about Bitcoin as an asset. I mean, it doesn't give you any kind of multiplier to fund more of the business. You could have used that money to fund the company. What is that connection? I don't get that.
Yeah, so what I believe is that Bitcoin on average is going to do approximately 30% every single year for the foreseeable future.
But I don't need to own your company to capture that for myself.
No, but if you want the exposure to what we offer, which is our overall business,
I don't want to buy your web listing business. I can buy Amazon if I want exposure to that, or whatever it is. Yeah, I still don't see this magic sauce that makes the combination better than two holdings.
Well, so what you want to do is, if you go back 6 months and you look at the amount of Bitcoin that we held for every single shareholder. And then if you look at the amount of Bitcoin that we held today for every single shareholder, so forget about the operating business, forget about everything else.
Yeah, but you've raised the money to do that. That's fine. You've raised the money and bought them. Of course you've got more.
Oh, no, per share. So
that's because the share price has come down.
No, it's because of the multiple in the share price above the net asset value that allows us to use the capital markets to raise capital at a premium, which allows us to buy more Bitcoin.
That sounds like a perpetual motion machine.
No, because it works in the opposite way as well. So if you trade at a discount and you've got a large balance sheet, you can use that balance sheet responsibly for certain things. And going back to the invention of Bitcoin originally, if you look at why it was invented, it's because the banks took irresponsible strategies with the leveraging of the property market. And that's what ruined the global economy. And arguably still, we're all paying the price of that. So if you look at what Bitcoin treasury companies are doing nowadays, by using potentially debt responsibly, it's a very different thing to, irresponsible leveraging, in my opinion.
One of the things I'm really interested in is the kind of culture around, and I know you've made different. You've said that crypto and Bitcoin aren't the same, but leaving that to a side for one moment, kind of big crypto events. And I know you said before that you're traveling a lot, flying around the world to various conferences. What do you have to say about the culture? In my head, it's very kind of tech bro. It's like a crypto tech bro culture. I don't feel like there'd be any place for me at one of those type of events. Am I wrong?
Yeah, you're definitely wrong. You get all sorts of people. I was in Hong Kong recently and I was speaking to a 60-year-old lady who I think she was there because she was trying to find opportunities for her son. That's what I deduced from that one.
It wasn't the crypto queen, was it?
No, it wasn't. She was a professor in one of the most prestigious universities in Hong Kong.
Okay.
So super, super smart, way smarter than I'll ever be. You get lots of people. You get people in suits trying to sell you things because there's a lot of businesses that rely on the Bitcoin ecosystem. Mm-hmm. Financial services companies, some of the biggest financial services companies in the world support Bitcoin nowadays. That was very different. If you look at,
I think HSBC just announced they were going to do something in Bitcoin.
Yeah, look at there's numerous examples. You can even go back to strategy. The guy that we all look up to, Michael Saylor, wasn't a fan of Bitcoin originally. So lots of people have gone through the process of actually no, it's a scam or whatever, and then eventually they see the light. Become
evangelists, all the language you just used around that reminds me, forgive me for saying it, is a bit of a cult, right? He's like the cult leader, and he was converted and he's seen the light, and now you all see the light too. I find it really terrifying.
It's the same though. So the easiest way to sort of get comfortable with it is to look at comparables. Mm-hmm. So look at history. So if we apply that to business and we look at the internet, I remember the early days of the internet, 1999, when I started my career, that lots of people would say, what's this .com rubbish? It's never going to take off. And if you remember that time, a lot of it didn't work out. You had ridiculous things, but then you did have other things that really worked out, like Amazon, like Google, a few years later, Facebook. So it's a new technology. I even remember when I started my career, not everyone had a computer on their desk. When I set up my business, the first iPad was invented a year later. So there's lots of things that come around that at first you think, wow, mobile phones, another great example.
That's a false analogy though, isn't it? Because Amazon and the iPhone were disruptive technologies that were better than what was there before. And so it's just replacing one technology with another. What you're saying with the Bitcoin treasury company is something more. You're saying that owning a certain kind of asset makes the other half of the company worth more. And I think that is a leap of faith, really, and which the share price shows.
Yeah, sort of yes and no. I would politely disagree. So I'd say that Bitcoin is a better asset than what it's here to replace, which is fiat currencies. And then I would say Bitcoin treasury companies, for people that understand them, are better than Bitcoin because they offer compound Bitcoin, the growth in Bitcoin per share. And then I would say, going back to my business, I would say that building your treasury on Bitcoin is a very sensible thing to do because it allows you to build your balance sheet to grow a business that wouldn't have the capital to grow without having that aspect to it. So I understand what you're saying, but I would politely disagree.
But there are lots of companies that have grown just fine without Bitcoin. And they've used the stock market, they used bank loans. They didn't need Bitcoin to grow. And some of the meteoric growth in companies has had nothing to do with Bitcoin.
No, but I think if we look at the data, so if we look at the last 6 months in the UK, we've raised approximately £200 million worth of capital. And I would suggest that there's not that many other companies in the UK that have raised that amount of money from the UK capital markets. So that shows you the demand that investors have got for things that are different. And my business is different.
You're planning to do stuff with that money, aren't you? You're planning to go off and do acquisitions and other stuff.
Yeah.
They've given it to you to buy Bitcoin, and you're going to eventually do something different with it.
Well, we're going to use it to grow the business by having the balance sheet. So, they probably wouldn't have given it to me if I said to them that instead of holding my treasury in Bitcoin, I'm going to hold my treasury in, pounds or, in marshmallows or something, So it's the overall proposition. And I think also our management team, why people have said, yeah, I like that idea and we'll go for it. And I think that that's good for the UK capital markets, because we've shown, and this is one of my gripes, if you like, that in the UK, we don't get appreciated for things on the global stage. And my company is my small contribution to that. There's lots of people. We've probably got 25% of our investors that are global. And that's really good for a UK company. We've helped to show people that you can do things in the UK. And what I hope we'll show in the future is that there's other businesses, ideally not just Bitcoin treasury companies, which we've seen a lot of, that say, actually, I like what Andrew's done then. I've got a great idea for a business. I need a few £1 million. I can explain that to people, and then they can use capital markets to grow that business. So if we look at, the London Stock Exchange and the Aquis Stock Exchange over the next couple of years, perhaps we'll have more businesses listing, smaller businesses listing. Smaller businesses are my passion.
We should probably say that Aquis, which people won't be familiar with, it's a stock exchange, but it's not the main market. It's not the London Stock Exchange. It's a private market for small companies.
Yeah, so they describe themselves as the growth market. So when we decided to list our business, we looked at the London Stock Exchange and we looked at Aquis. And we went for Aquis because it was, to be blunt, cheaper and quicker. So we could get listed. And then our aspiration is that we'll move on to the London Stock Exchange at the appropriate moment. So if you've got like an ISA or a SIP, or you use like my former employer or something, you can buy shares on one of the two markets. And I think investors are sort of, relatively speaking, retail investors are relatively speaking indifferent to which market they're on, because a lot of London Stock Exchange companies will actually trade on the Aquis platform as well. But yeah, it's a growth market is the polite way of describing it. And funnily enough, when we listed on it, we were one of the smallest, and now we're the biggest company on the segment of Aquis that we're on, and we're the only company ever to get to £1 billion market cap on Aquis. Yeah, the only company ever. We've obviously, as we've discussed, we've come off a bit from that level now. I'm sure we'll go back there in the future, but yeah, that's another pretty cool achievement.
So what's the time frame? What are you looking at in terms of entering the FTSE 100, if indeed that does happen?
Yeah, so I think I have to refer back to what the lawyers have told me to say, which is it's an aspirational goal. And
we've got this 10-year market plan, which certainly doesn't lack ambition, does it?
No, so I have said that I would like to be one of the biggest companies in the UK, and then maybe in time the biggest. That would need to be an approximately 160 billion, something like that, market cap. It's a pretty hefty target. We probably, if we double in value, we'd be big enough to be on the FTSE 250. Clearly, we cannot be on the FTSE 250 until we're on the London Stock Exchange. So we just see how that one goes.
Can I just come back to one thing you said earlier, which might be a good way to wrap it up, actually? I think a lot of people who are listening might struggle to make some of the connections you've made between the Bitcoin holding and the operating company and why it's, all that sort of stuff we've talked about. But one thing you said, I think, that resonates with a lot of people and may explain what's happened to gold this year, was something you said early on, which is that you don't trust traditional currencies. You don't trust the pound, you don't trust the dollar, etc. Why don't you trust them?
Because they've been badly managed, if I'm honest about it. So the great thing about Bitcoin is there's only ever going to be 21 million of them. And, individuals, companies can buy fractional Bitcoin. So it's not like there's 21 million that will exist. There's 21 million that will exist, but they can be divided up, into tiny, segments of a Bitcoin. That's fundamentally different to the pound or the dollar. The pound and the dollar is the equity of the government. So it's used by the government, well, not that well, but with a bit of luck, at some point it will be used for the benefit of the population. And that's why it's fundamentally different. And that's why Bitcoin is better than gold. Because the thing about gold is that it's not easily portable. I can send hundreds of millions of pounds worth of Bitcoin from one place to another in seconds. It would take an hour to effectively fully settle on the blockchain, but within seconds. With gold is produced. So if one day we can go to space, gold's finished, yeah? So if we can mine what's potentially in space, gold is finished. It's been here for 2,000 years. Bitcoin, no, because it's built into the maths. So somebody once told me that if you could extract all the gold from the ocean, gold would be finished as well. I don't know whether that's true. I've never got around to looking it up. But Bitcoin is better than all of these other assets because of its inherent properties. And that's why it was designed like that.
Can I ask you just one final question? I've been talking to chief executives recently about their personal security in light of events that have happened in recent years. As you point out, Bitcoin, that you have a lot of it, right, in your current company, and you just made that point that you could transfer hundreds of millions of pounds worth of Bitcoin like that, particularly perhaps if forced by a particularly burly man standing over you. How do you think about your personal security? Do you have to have personal security? Because we've heard people being murdered for Bitcoin, right? So how do you think about that?
So
or
clearly,
maybe you can't tell me.
Well, no, like we're transparent about everything. So when we listed the business, I've had to learn a lot of things over the last 6 months because I think it's fair to say that the success has come quicker than we were expecting. So we've got a lot of security in place for me and my family personally. So there's little things like I can't go to certain events. I have to be driven to certain events and just things that I'd rather not be, but that's how it is. I've got friends in similar-ish positions that have moved out of the UK. For that very reason, the Emirates is quite a popular place for that, not just because of the tax, but because of the zero tolerance attitude to criminals. But I'm not going to do do that because I love the UK. I was
going to say, you talked about transportability. Maybe we'll read the papers tomorrow. Andrew will be in Dubai.
I love the UK and hopefully not. But as a company, right from before we listed, we set everything up properly. So I always use the example of our CFO, which I'm not sure whether he likes, but if you track down our CFO and put a gun to his head, he couldn't give you the Bitcoin and we'd have to say goodbye to the CFO. And it's the same with me. There's not one person in our organization that can move the Bitcoin without other sign-offs.
Brutal.
Well, that's a great shame because I was looking forward to my retirement in New Zealand, actually. Listen, Andrew, we've run out of time. Thank you very much for being so generous with your time and explaining it all to us.
Yeah.
Thanks very much. Andrew Webley, Chief Executive of the Smarter Web Company. So, Hannah, you heard it all from Andrew there. Did he convince you? Did he persuade you out of your Luddite views about Bitcoin?
I'm never going to forgive you for calling me a Luddite, Dom. But do you know what? Maybe, I wouldn't say I've seen the light totally. It's not like all sunshine and rainbows. But he's very convincing and he's very credible. I think that's the other thing, is that there's all these kind of preconceived ideas about people who are heavily into crypto, Bitcoin. I know we're making a distinction between the two, but yeah, I think he made a very compelling argument. How about you?
Well, I hear his arguments around owning this particular type of asset, but I still struggle to see the multiplier effect between owning Bitcoin and having that operating company. I think a lot of investors will still think, well, actually, hang on, I'll just hold the Bitcoin myself if I really wanted to buy Bitcoin. And once Bitcoin investment funds come along in the UK, which they will eventually, they'll be regulated, then I think a lot of investors will just say, well, I'll just buy the Bitcoin company. I don't really care about its operating company, and I don't care about his strategy to marry the two together. The proof will be in what he does. If he does get to the main market and he makes a success of this acquisition strategy, then I think those doubts will be answered.
I think it's really interesting because perhaps it's people who, you referred earlier to the Luddites who invest in their kind of
they do get a bad rap, but the Luddites in reactionary were not Luddites, if you know what I mean. Anyway, that's the rest is history.
But the people who invest in, tracker funds, like nice, stable, kind of steady investment funds that kind of plod along, and they're used to investing in stocks and shares. I think that this is kind of a middle ground. It feels like a structure that they're used to. Do you know what I mean? It's not a million miles away from something else. It sort of looks the same and behaves similar, but gives you a better return. I don't know. Maybe there's some comfort in the way it's structured.
Possibly. So you talk about volatility and investment. Well, if you had stuck your money at the start of the year in that FTSE 100 tracker, the most common kind of investment in the stock market, you would have made 20%. The FTSE 100's had a pretty steady, pretty good year actually. Whereas if you'd bought the Smarter Web company thinking, hooray, if you bought it at the wrong time, you might have gone from £5 when it had that £1 billion valuation Andrew talked about, all the way down to 60p. So lost most of your money. So how would you feel about volatility and returns versus the FTSE 100 then? Stability and fun is two different things.
But doesn't that come back to his point about volatility?
Yeah. Some investors love volatility.
Yeah.
It's another whole argument we didn't get into.
Yeah, absolutely. Not time for that today.
Anyway, this is The Business. I'm Dominic O'Connell.
I'm Hannah Previtt.
As well as listening to us, you can also catch the show on YouTube and see us. Horror. I was recognised on the street the other day about the Jim Ratcliffe thing.
Were you indeed? I was recognised in a bar the other day, so I'm not sure what that says about us. You spend more time pounding the pavements than I spend more time in bars. You can like and subscribe on all the platforms, so YouTube and the various podcast platforms. Do leave a comment or get in touch with us at thebusiness@thetimes.com.
We will see you next week, which is...
Budget Week.
Can't wait. See you then.
See ya.